All right, let's dive right in. Today we're talking about trading Micro Nasdaq Futures, that's /MNQ, using a really powerful but often misunderstood tool called gamma exposure. By the time we're done here, you're going to have a complete playbook that's designed to give you a real, tangible edge in the market.
So, let me just ask you a question. Have you ever been watching the market, just staring at the charts, and you get this feeling that there's something else going on? Something just beneath the surface, some kind of invisible force that you can't quite put your finger on? Well, you're not wrong. And today we're going to pull back the curtain and show you exactly what that is.
So here's our game plan. First, we'll talk about getting what I call trader's X-ray vision. Then we'll nail down exactly what gamma exposure is and who the market's biggest movers are. After that, and this is the good part, we're going to build a step-by-step trading playbook. And finally, we'll see how this all helps you go from just guessing to actually anticipating. Let's get into it. Okay, first up, the trader's X-ray vision. Think of this like learning to see the hidden blueprint of the NASDAQ. You know, underneath all that chaotic minute-to-minute price action, there's an invisible framework that's guiding the flow, and it's built almost entirely by the options market. Getting this concept is the very first step to trading with a massive advantage. So, what is this tool that gives us this X-ray vision? Well, that brings us right to Section 2. What is gamma exposure? See, to understand that hidden structure, we first have to understand the force that creates it. This part's going to break down GEX, as it's called, and really explain the why behind some of the market's biggest and sometimes most surprising moves. To put it simply, gamma exposure is all about how big options dealers have to manage their risk. See, when tons and tons of options contracts pile up at certain price levels, these dealers have to buy or sell the actual stocks, in this case NASDAQ stocks, to stay neutral. All of that required buying and selling creates these incredibly powerful magnetic zones that either pull price right towards them or act like a wall and push it away. This quote just nails the whole idea. Think of GEX as a probability map. It shows you where that invisible hand of the giant options market is probably going to steer the price. It's not a crystal ball, right? It's not going to predict the future, but it is an incredibly powerful tool for understanding the forces that are really at play. Now, these powerful gamma levels don't just appear out of thin air. Nope, they're created by massive, and I mean massive, amounts of options trading in a handful of very specific, very influential stocks and ETFs. So in this section, we're going to pinpoint the market's biggest movers so you know exactly what you need to be watching.
To really understand MNQ, you have to look beyond its own chart. The real story, the real drama, is happening in the options activity of these key ETFs. QQQ is obviously the most direct one, but the tech-heavy XLK and the all-important semiconductor ETF SMH are just as crucial. We even watch SPY because, let's be honest, the S&P 500 often sets the mood for the entire market. And just look at this. This shows you the sheer concentration of power we're talking about in the NASDAQ. Just two companies, Apple and Microsoft, make up almost 20% of the QQQ. So what does that mean for you, the trader? It means their individual gamma levels can act like a huge tailwind or a massive headwind for the entire index. Watching these two is absolutely non-negotiable. And it's not just Apple and Microsoft. Other giants are always adding to the volatility. NVIDIA is a perfect example. I mean, that thing's a volatility engine. When its options activity gets crazy, it can trigger a gamma squeeze. That's a super fast, accelerating price move that can drag the whole market with it. Then you've got the other mega caps adding their own layers, and of course, Tesla, where the huge retail interest can create some really wild, unpredictable swings. Okay, enough theory, let's get practical. Section 4 is our trading playbook. This is where the rubber meets the road. We're going to turn all these concepts into a concrete, step-by-step plan that you can actually use to find high-probability trades. So here is a hypothetical map of what these key gamma levels could look like for MNQ. You can see we've got resistance levels, which act like ceilings, and support levels that act like floors. And right there in the middle, we have the zero gamma pivot. In this example, it's at 24,800. This pivot, it's the market's balance point. It's an area where you should expect choppy, indecisive price action. You know, the best way to visualize all this is as a gravitational map. That pivot at 24,800, that's the center of gravity. And the support and resistance levels above and below it are like powerful magnets. Your job as a trader isn't to predict, it's to simply watch. Watch how price reacts when it drifts into one of these key magnetic zones. So how do you actually trade this? It's a simple 5-step process. First, you identify the key gamma zones, and you mark them on your chart.
Second, and this is the most important part, you do nothing. You patiently wait for the price to come to one of your levels and you just observe the reaction. Third, you look for confirmation. Do you see a big spike in volume as it bounces? That's your signal. Fourth, you place your stop. The logical spot is just outside that gamma level to protect yourself if the zone breaks. And fifth, you set your target at the next logical gamma wall. It's a disciplined, repeatable process.
Let's make this super real. For a bullish scenario, imagine price comes down to that 24,800 pivot and it holds. You could go long right around there with a target of the 25,000 resistance wall. Now for the bearish side, price rallies up to that 25,000 wall but gets smacked down. It rejects. You could go short there and target the 24,800 pivot as your first stop. The plan is clear and it's based on the market's actual structure. Now here's a really crucial point. The gamma map also tells you when not to trade. When price is just stuck, chopping back and forth around that 24,800 pivot, the market is perfectly in balance. The dealers have it pinned down. Trying to force a trade in that environment is a losing game. Real discipline is recognizing this and knowing that the most profitable move you can make is to just wait for a clearer opportunity. This brings us to our final section, and it's the most important shift in mindset you can make. Using GEX is all about evolving from a trader who guesses what might happen next to one who anticipates what is likely to happen next, all based on the market's hidden structure. It's a completely new edge. At a high level, it really comes down to this. When dealers are short gamma, they basically have to chase the price, which just amplifies every move and leads to those big explosive trends. But when they're long gamma, they fade the moves, which crushes volatility and leads to that frustrating, choppy, range-bound action. Just knowing the overall gamma environment tells you what kind of market to expect. So ultimately, what does all of this give you? It gives you the trader's equivalent of X-ray vision. It's the ability to stop just looking at the price chart and start seeing the hidden forces, the underlying structure that is shaping the Nasdaq every single day. And that is a powerful edge to have.